Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to take a peek at some of 2020's biggest year-to-date gainers in the stock market. And we're just going to click through a couple metrics on each one. And the purpose here is really just to see like, hey, can the run continue on some of these high flyers? What does the outlook look like for 2021 for the tools that I have available? But I thought you'd find it interesting. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before making any investments. And of course, if you like stock market analysis like this and other personal finance videos, please make sure to give this video a like and subscribe to the 40 Finance channel. Thank you to everyone who has supported the channel this year. All right, so to identify our stocks, we're just going to use this simple list that Yahoo runs all day, every day, which is largest 52-week gains. We're not quite in the 52nd week of the year, but it works really well for us to just pick through the data here. And if you scroll down, you start to get into the names that we all know and love here from 2020. And first stock on the board is Tesla. And we're not going to cover every stock on this list. I think it has about 30 names. I'm just going to pick out a couple that have been popular this year, and then we're going to drift off and see, what do analysts think in terms of earnings, EPS, stock price. All of this stuff is analyst orientated, so these are not my opinions or my numbers, but I'm just going to share it with you, sort of a behind the scenes, and maybe it'll help you with your investing decisions in 2021. All right, so on the analyst front for Tesla, and you can find this pretty easy and it's free on Yahoo Finance. When you go to the Tesla main page, which looks like this, you see this toolbar that runs across the top, and you want to just select analysis. And that brings you here, and I spend a lot of time on the analysis tabs, not because I think that they're the Bible by any stretch, but it's a good aggregation of what people are thinking. So you can see that we have the number of analysts, and we always want to have like a pretty good sample size, just at a high level to let us know what analysts are thinking. A little bit later, we'll dig into TipRanks on each one of these, which I think does a better job of combing out, all analysts to sort of the high performers, and they do date stamps and stuff like that. But for purposes of this quick glance, we'll just use the analysis tab on Yahoo. And what we're looking at here is our earnings estimate for next year. We know that Tesla was one of the biggest gainers in 2021. So what does performance look like next year? And from an EPS standpoint, which is a little squishy for Tesla because they're just now profitable. Last year we had an EPS of 4 cents per share. This year analysts see them coming in at 229. And next year the projection on average is 384. Going down to the revenue column, which is probably a better way to look at Tesla. This year, when everything's all said and done, their sales growth will expand by about 25%, which would be going from 24.5 billion up to 30.89 billion. And then next year on the averages, you're looking at 45 billion is where people are projecting, and that's actually a larger increase of 47%. So very strong projections on the revenue side and the EPS side for that matter. Then I like to scroll down, way down here at the bottom. They do these growth estimates on Yahoo, and these are actually sourced from a third party. I don't know if it's Morningstar or Argus, but these numbers do come from a third party, and they used to put a note where they came from, so sorry, I don't know where that is. But long story short, growth estimates for Tesla stock here in the current year, whatever that is, over 5,000%. Next year, the projection is 67%. And I think some of these numbers are a little off, but hey, we'll just take them for what they say. The next 5 years per year, they see a 400% increase per year over the next 5 years. My guess is that calculation is probably goofed up a little bit. but you never know. With Tesla, they've certainly defied all odds. But anytime you're getting wacky numbers like this in a current year, the system isn't designed to project growth for a stock like this. But long story short, all signs on Tesla look positive for 2021 if you are an investor. All right, now we'll switch over to TipRanks, which I think does a better job of sorting through all the analysis, price targets, and it actually ranks people by, their little star rating or whatever. TipRanks defines price targets as the projected price over the next 12 months. So we're at the end of the year, so that seems like a good time to look at it. Then we kind of double check the freshness of the ratings because, the news changes so quickly. And you can see right off the bat, even like 1 or 2 months ago, everybody was at this 500 or so mark, and now we get up into the last month or so, and you're way over 600 on all these guys. So the projection is more gains for Tesla stock, which is, almost hard to believe, but that's what the analysts are targeting, and you got sort of plus 10, plus 20% over the next year. So all in all, if you're looking for like a grade card on Tesla heading into 2021, everything looks positive. News changes every day, things change, and that might affect the stock's price. But as far as right now, the outlook, I would say, is pretty darn positive. I am not a Tesla stockholder, and I've been a Tesla doubter in the past, but there is nothing on these metrics as we scroll through that insinuates Tesla will struggle next year. Okay, back to our master list, and Zoom, which was obviously the poster child for pandemic stock gains, is number 2 on the list. So let's take a look at Zoom. And looking at the earnings estimate, the year ago EPS was 35 cents a share. This current year they're looking at $2.91. And their current year is displaying 2021, which means their fiscal calendar bleeds into 2021 at some point. Sometimes it's just through the first quarter of 21, sometimes it's through June. It's hard to tell from here, but just know that this is technically the 2021 estimate. Then you bleed ahead into 2022. And what's interesting here is you can see on an EPS side, there's definitely a slowing projected into fiscal year 2022. So that's only an 8-cent gain from the 2021 fiscal year. So that's something to note from a growth rate standpoint. Then we go down to the revenue. And last year you had $622 million in revenue. This current year, the expectation is $2.5 billion. And into 2022, $3.5 billion. So revenue doesn't appear to be the problem, but when you compare it to EPS, how does that revenue trickle down into earnings per share? There are obviously some levels in here where the revenue doesn't trickle down directly to the EPS, at least from an analyst perspective. All right, scrolling down to our last column, which is the growth estimates. Current year growth, holy mackerel, over 700% for Zoom. Next year's growth, this is fiscal year, by the way, we saw that 2.7%. And then from there, though, you get 130% per year over the next 5 years. Again, that's a pretty bold calculation, but at least it's positive if you're a Zoom investor. But some of what I'm seeing here just on this chart is, the 2022 fiscal year is projected to be, barely above flat. So if you are a Zoom investor, it doesn't mean that the company's doing bad things. It just means that you're comping an incredible stretch, and it may take time to build more profits from all of the gains that they made during this pandemic period. Okay, on the TipRanks side of things, again, we're looking for fresh. We've got a lot of analysts here from the past 22 days or so. And, this one's getting some holds in here, a handful of buys, 1 sell. But, those that are in the buy category, you've got whatever, plus 40, plus 40, plus 40. and the others are in that plus 20% range. So I think, with Zoom, you're starting to get to that fork in the road where there's a divergent opinion on how much does this thing grow from here over the next 12 months, particularly when analysts are suspecting that growth will slow temporarily, and then assuming Zoom continues to make strides with their paying customers, that growth resumes in 2023. So all in all, when you put the grade card together, I would say if I held Zoom and I believed strongly in the company, I would probably hold on to my shares, particularly if I got them at a great price and I didn't need the money. But you might have a up and down year next year, and you might see some flat, potentially some minor negatives. But the outlook for the longer term, 2 to 3 years, seems like most analysts agree that the growth will continue, and they will grow next year. I shouldn't say that they're not going to grow. It's just the translation to EPS looks a little light in fiscal year 2022. Okay, next on the top 30 list is C Limited. I'm going to skip that one. It's not US based, but it is a very intriguing stock, and I encourage you to do your research about it. They basically have a three-pronged approach in either Thailand or Singapore or something like that. But it's kind of like a Square plus mobile video games for that region. And I'll just show you real quick. It gets a lot of positive coverage by analysts, yet it's still young enough and not quite profitable that you just have to take it all with a grain of salt because it has run up so much. Check out their investor relations page. They do a great job of breaking down the three prongs of their business. If anything else, even if you're not interested in investing in foreign stocks, I found the presentation to be intriguing. So that's C Limited. Check that one out on your own time. For purposes of this video, we will skip ahead to the next stock in the top 30, and that is NIO. NIO, of course, is the Chinese EV car maker that, that stock has gone absolutely bonkers. I can't believe that it's not the number one on the list, frankly. And digging into the NIO numbers from an earnings standpoint, and this is sort of hard. This, as you guys know, one of the things I struggle with is the Chinese accounting principles and the lack of American auditing on those. But let's just take it for what it's worth. In this current year, last year's EPS was minus $1.50. By the end of this fiscal year, they bring that up to minus 61 cents. And then next year, they get to minus 29 cents. So although it's negative, this is all just a high growth company. So what you want to see is less losses, right, as you march towards profitability. And they are certainly basically trimming their negatives in half, at least from an analyst perspective. On the revenue side, you had 1.1 billion last year. Analysts suspect that that will land basically double, right, to 2.43 billion in 2020, and then another double up in 2021 of 4.91 billion. So that's 2 years in a row with over 100% sales growth, which is obviously a very positive sign. Now let's take a look at the growth estimates for NIO. Again, this comes from a third-party service, so it's not going to be the same as analysts. Current year at 59.3% is the expectation. Next year, looking at another 50%. But then this next 5 years, minus 0.15%. It certainly seems like an anomaly compared to what they're projecting, but it's something to think about. And I guess if I was going to invest in NIO and I was going to hold it for a long term, I would certainly be interested in their 5-year plan to make sure that we're going to continue growing. But in terms of 2021, there certainly seems to be enough here to speculate that NIO revenue and earnings will continue to do well. Whether or not that's already priced in to a stock that has run up so high, I guess that's what the market decides during trading times. All right, on the TipRanks side of things, we got some pretty fresh estimates here, 1 month up to 9 days ago, and mostly buys, couple holds, anywhere from the 46s up to about 60 in the price forecasts. So most analysts are saying like, hey, there's more room to run. NIO's about at 47 bucks or so today, and you could see as much as $60 over the next 12 months. All right, getting back to our list, and I'm going to skip ahead to Peloton just because it's going to be the last one that we have time for here today. So let's take a look at Peloton. Obviously, a pandemic success story, selling exercise bikes as well as the interactive video service that goes along with it. So let's try to figure out, is this a one-time thing for Peloton, or do they have some more gas left in the tank? All right, so for Peloton, their current year, so the one that they're already in, is 2021. So they may have had a fiscal calendar that runs in the middle of the year, or some people put the traditional fourth quarter as their first quarter. But regardless, last year's fiscal year finished at minus 32 cents. The average estimate for this year is plus 35 cents. And in 2022, the expectation right now is that that will double up to 72 cents. Similar to what we just saw with NIO, and that is a doubling of earnings per share. In Peloton's case, so you're doing that at the positive level, which is a good sign. All right, scrolling down to revenue. Last year, you had over 100% revenue gain, going from 1.83 billion to the projection of almost 4 billion in the current year. And then the next year, that is projected to jump to 5.26 billion. And this is a good example of a company that where profits start to take over if just by these eyeball numbers. So let me show you, if a year ago sales were 1.83 billion, and this year they're jumping up to 4 billion, and then next year, technically that revenue is not on the same pace, right? It's a 33% gain, whereas this past year over year, you're at 115% gain. But what you're seeing with Peloton, and this is where the magic happens in good companies, you're going from negative EPS to positive EPS, and then you're doubling your earnings per share even though your revenue is not doubling. That's definitely a strength for Peloton. You may not be able to capture the same pace of top-line sales, but if you can turn those into earnings per share at a better clip, then all of a sudden you've got yourself a strong company. Scrolling down, let's take a look at those growth estimates. Current year, plus 200%. Next year, plus 100%. And then next 5 years, minus 6%. So that is definitely a long-term concern as of today. Again, this is just one research metric to consider. It doesn't mean the whole ship is crashing. It just means that we need to look into that, right? If you are going to buy Peloton tomorrow and you're a long-term stockholder like me, I think that there's a decent chunk of excitement here for the next, 18 to 24 months. And then after that, it gets a little more murky. News can change though, right? Peloton could pick up another company. They could open gyms. Who knows what they'll do? But just know that the long-term outlook over the next, past the next 2 years, I would say that there's probably some work to do there. All right, guys, so that's a look at 5 of the top 30 stocks this year and trying to give you some insights on where they might go next year based wholly on analyst projections and other third-party sources. So let me know what you think in the comments. If you like this, I can always keep going on the list. But honestly, this video was something that I was doing for myself anyway, just to look at. So I was happy to share it with you. Let me know what you think about it. And of course, give me a like and subscribe if you enjoy this video. We'll see you on the next one.